Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar's bullish performance covered further ground and returns now to levels posted back earlier this year in mid-February near the 69-cent handle. The acceleration on Thursday was mainly triggered by the weakness of the US dollar. Along with that, Thursday's solid job report also supported the rise, which now gives further pressure on the RBA of its next meeting in July, which could see a 25 base point rate hike. Presently, the rates stand at 4.1%. In the data, Australian unemployment rate came in at 3.6% in May against the 3.7% anticipated and prior after 75,900 jobs were added last month, notably above the 17,000 expected. And along with that, the negative 4.3 or 4,300 previously reported. The dollar index was also weaker after the US retail sales rose by 0.3% in May versus a negative 0.2% forecast, while weekly initial jobless claims remained unchanged from the previous week at 262,000. In light of the pattern, the market could squeeze higher, but I would like to make a note that the RSI is extremely overbought and therefore could see a sharp rejection as we head towards that 69 cents, the resistance seen at 69.0520. And from here we could see profit taking as the market has held now for some time since the rebound of 64.60. As widely expected, the ECB hiked rate 25 basis points, and with the hawkish tone indicated a possible one in July. This on the flip side as well saw the gains returned after the US Federal Reserve rate decision, and the press conference was a little bit to the hawkish side. Nevertheless, the technicals have also in overbought area and therefore could see the market reverse from the top side range somewhere around 109.80-90, and if so could see a significant downturn back towards 108.80 to 108.35. The call for the upside for dollar yen just was a little bit short of its target of 142 after the market stabbed the highs around 141.5. In light of the pattern, the long tail is a little bit negative and therefore could see a bit of profit taking coming back into play here. But overall, the bulls should still maintain anywhere close to that 139 area and therefore could eventually see that topside challenge. So I'm not abandoning it as of yet. Also, eyes will be looking at the Bank of Japan today with its monetary policy and no doubt will remain unchanged at negative 0.1. The pound was also stronger, as you can see now heading towards further gains on the back that the Bank of England may hike rates next week. In light of the pattern, we are overbought, but the trend is still quite strong. The initial target at present is seen around 128.15 and could actually see a further rise on towards the region of 128.65, with any pullbacks finding support around 127.45. The down challenge for gold rejected the area of 1,928 and currently puts in a braver stance around 1,950 this morning. Technicals are still somewhat lackluster, and therefore I feel the market will once again return these gains and eventually see another down test. I feel the market is or potentially can see a lows around 1,912 as a target, and this rebound is likely to be giving opportunity for the bears to return. And finishing up with oil, the rebound overnight now puts a slightly positive tone after the engulfing candle awaits confirmation. A break above the level of $71 could see further rise back towards that 74 region and reassess. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.